Good morning. I'm Catherine Ross, and I'm joined by Jim Cramer. We're joining you via Skype this morning in our efforts to do our social distancing part. So, Jim, what's top of mind for you this morning?
Top of mind for me is the fact that your rent's due, and what it means for the banks, and whether we are at a juncture where we're going to just have more bad news because of the mortgages. Is it worse, some people say, than 2007, 2009, or are we making a terrible assumption that things aren't that bad? And it really does matter because it's at the crux of whether you should buy stocks or not. I was asked a great question by one of the guests this morning and by Carl and David. Is this the time? And do you put money to work? And the answer is that if you've got a long-term view, I do expect the market to be down a little more, but I can't time the market perfectly. But you certainly can say that it's down a lot from the high, and so therefore you're not buying the high, and I kind of like that. We've been looking all morning about what to buy for action alerts, and it's not easy to see what to buy, but we're certainly trying to do it. I mean, literally, that's what I'm doing my guys. I'm saying, let's do some buying. We're going to go back and forth. For club members, you know what that means. We are not going to let you down just because we're doing videos. We're going to find something with the market down this badly. So anyway, that's kind of what we're up to.
Jim, this morning the United Nations put out a call to action report on the coronavirus, and it focused a lot on why we need to come together globally, and they also discussed developing countries and why, the U.S., China, Europe, they all need to step in to help out. I'm wondering, Jim, should investors read through this UN call to action?
Well, I mean, the first thing I think I'm doing, I think, is WHO, and they completely hosed us. They didn't do anything right. They didn't help us at all. When I hear the UN telling me that we should worry about other places, I'm not a jingoist. I'm not a xenophobe, but our country is facing one of the most serious problems that I've ever seen. And I think that, yes, we want to help these other countries. It's not like what Dr. Fauci once said in a great speech, a great interview that he had at Regis, where he said, look, he went to, when George W. Bush came in, he called Fauci and said, listen, we got to solve the HIV problem in Africa. But that was only after we solved the HIV problem in our country. And I think we spent a lot of time helping other countries. It's almost 100% unrequited. And I feel like that we have to help America, and then we can help overseas. That, again, is not jingoist. It's just that we are really in an emergency here, and it is much worse than anyone thought. It may be. I don't think it may be worse than a lot of the lesser developed countries, in part because we're behind, and in part because we're more densely populated. But let's not forget, the death toll in this country is so horrible that if I start talking about helping another country, I really think I'm not getting I'm not getting it right. It's our country we have to worry about right now. We can't squander any resources.
This morning over on CNBC, you had a very excellent interview with Treasury Secretary Steven Mnuchin. Based on that interview, you really honed in on small businesses and what the government needs to do. We've passed this $2 trillion package, but this might not be enough to save the small business. So I'm wondering, if you were to create this package, this next package, say that we need a follow-up, what would you put in it? And do companies like Walmart, Amazon, Costco, do they need to be lending helping hands to small businesses at this time?
Well, look, that's their enemy. Their business is. I'm not going to ever say that any of those places they're going to be winners. They have to help others because it's still capitalism. If when I go back and forth with Secretary Mnuchin, give me a Trump bond. I hate him or like him. That could raise a lot of money, which is going to be allocated to building the infrastructure that we know is crumbling. But more importantly, because that's then you get the shovel ready, which is really, really hard. More important, we need the money to be able to keep the base alive. And we may go through all the money for the 85% of the working people at small and mid-sized businesses. And I think what we really want is to create a fund that makes it so that when we start seeing bankruptcies, we can make it so that, or we start seeing for people asking for forbearance, the Fed has the money to be able to say, you know what, we're not going to let this hurt the bank's balance sheet. We're going to be able to take care of the forbearance for X number of days. And I know that the country wants a 30-year bond. I know that there are things. The reason I mentioned infrastructure is because I know that gets it passed because the Democrats and the Republicans want it. Infrastructure has always been kind of a sucker bet. And the reason why it's a sucker bet is because have you ever seen the way we build things in this country? There's like 5 people on a bridge. It just does not work. But we need it, and everybody wants more infrastructure spending. But in our country, we don't do what the Chinese communists do, which is to put the Eighth Army to work with hundreds of thousands of people in infrastructure. We tend to have a strategy which is people short and doesn't put a lot of people to work. I think we need to be far more oriented toward putting people to work in the new economy, maybe with 5G build out. But more importantly, we want to keep people in place, in the businesses that they were in. We want to get the economy back to where it was because it was the greatest economy of our lives, and that's what we want. We don't want to see a huge number of cranes with 5 operators. We want something that makes it so that we're back to the way we were.
Last night, your Real Money column focused heavily on saying goodbye to Q1. Now, as we enter Q2, we're seeing a rough day in the market so far. I'm wondering, how should investors be saying hello to this next quarter where we're going to have a lot of us in isolation again?
Okay, well, let's take Gunlock, who's a very smart guy. Gunlock says we haven't seen the bottom. And it's entirely possible we haven't seen the bottom. But he's an index guy. I know he does run stocks, and that's terrific. But we need to see the bottom in particular stocks. The index is a great betrayer of you right here. And as long as if people constantly just buy index, then maybe they're going to say, you know what, we shouldn't buy JP Morgan. We should buy the index. I'm trying to figure out JP Morgan Citi, whether they're cheap or not. I can't tell. After listening to Michael Corbat, I was heartened to think that Citi might be cheap with a 5% yield, but then I worry about bad loans. And so then you have to try to figure out whether the bad loans trump the idea that maybe the dividend is good. And where I'm going here is that I'm saying that the averages may be going down a lot more, but there's individual stocks that are close to the bottom. And I'm trying to figure out which ones they are. And when I get those, then I know I'll do well for our readers and our viewers.
We have a Twitter question this morning. It's from Ryan Roberts, who is a first-time investor, and he's got some discretionary income to put to work. He's wondering, how should he act in a...
The basis, remember, I always want to get in because I know that it's really important that people recognize I'm not anti-index fund. The people who promote index funds in this country are anti-you and anti-me. They're anti-stock pickers. They're anti-people owning stock. I, on the other hand, am ecumenical. I think that the basis should be an index fund. But then if you have some discretionary money, maybe you can buy a stock, because we've seen a stock like Tesla, a stock like Netflix, a stock like Amazon do so well that it makes up for how poorly an index might be doing. The people I deal with, the experts who are all promoters and stand to make a lot more money if you buy an index fund and want your money and want your ETF, and therefore don't have to take any risks, because they always say, hey, listen, you're an index fund. These are people who routinely think that you can fool everybody, and they talk to you about single stock risk. I don't despise them. I just think that they're ill-advised. And I think that everybody should have the right, with some discretionary money, to find the next Netflix or to find the next Tesla. And the idea that you can't, it makes it so that people are saying that you're stupid. Now, let's say we were in another business. Let's say we were in the coffee business, okay? And you're Bluestone Creamery. Do I tell that guy, look, you're an idiot? You're going up against Starbucks. You're taking such a risk. No, I encourage that person to take that risk. I am saying that I want to encourage people to take a risk on individual stocks after they've got their bedrock index. So there I am, totally pro index, but I'm not going to treat anybody stupid. I'm not going to condescend. I'm not going to patronize. I think the people who call and study and read and look at our recommended list or action alerts, I think those are good people who are trying really hard. And I'm not going to denigrate their efforts because they're probably going to get great stocks. So there's my speech.
Thank you, Jim. Now, of course, please keep sending in those Twitter questions at by Catherine Ross and at TheStreet. We are now heading over to our Action Alerts Plus daily rundown show over on actionalertsplus.com, where Jim's going to give you a sneak peek into what he and the portfolio are eyeing in this market today. You're not going to want to miss it. I'm Catherine Ross, and we will see you tomorrow.